The initial coin offering, ICO, is a fundraising method widely used in the universe of cryptocurrencies. This method is similar to the initial public offering, IPO, which is used by companies wishing to go public on the stock exchange. However, instead of issuing shares, companies carrying out an ICO issue tokens, which are units of value that function similarly to traditional currencies such as the dollar or the euro. ICOs have emerged as an alternative to traditional funding for companies in the technology sector. Instead of seeking funding from banks or angel investors, companies can run an ICO and sell tokens to the general public. This allows companies to raise funds in a faster and less bureaucratic way than traditional financing methods. The tokens issued in an ICO can have different functions. Some tokens entitle you to a share of the company's profits, while others can be used as currency within a given ecosystem. For example, a company that develops an online game might issue tokens that can be used to purchase in-game items. To carry out an ICO, the company must create a white paper, which is a document that details the project that will be financed with the resources obtained from the sale of tokens. The white paper should contain information about the team behind the project, the market in which the company operates, the objectives of the project, and how the resources obtained will be used. ICOs are carried out in several stages. The first step is the pre-sale, where the company offers the tokens at a lower price to attract investors. After the pre-sale, the tokens are offered to the general public. The sale of tokens can be carried out in a single step, or it can be divided into several steps, depending on the project. After selling the tokens, the company must use the funds obtained to develop the project described in the white paper. Tokens can be traded on cryptocurrency exchanges, and the price of tokens can fluctuate according to market supply and demand. ICOs have been the subject of criticism and controversy. Some critics argue that many ICOs are carried out by companies without a solid project, which use the ICO only as a way to obtain funds quickly. Furthermore, ICOs are poorly regulated, which can lead to fraud and scams. Despite the criticism, ICOs have been used by many successful companies. For example, blockchain company Ethereum held an ICO in 2014, where it sold ETH tokens for a total value of $18 million. Today, Ethereum is one of the largest cryptocurrencies in the world, with a market cap of over $200 billion. In summary, the ICO is a fundraising method that has been used by companies in the technology sector. This method allows companies to obtain funds quickly and less bureaucratically than traditional financing methods. However, ICOs have also been the subject of criticism and controversy, due to the lack of regulation and the risk of fraud and scams. How to participate in an ICO? Initial coin offerings, or ICOs, initial coin offerings, are fundraising mechanisms used by companies wishing to launch a new cryptocurrency project. It is a form of crowdfunding, where investors buy company tokens in exchange for existing cryptocurrencies, usually Bitcoin or Ethereum. Here is a step-by-step guide on how to participate in an ICO. 1. Research and due diligence. The first step to participating in an ICO is to do your research. Not all ICOs are created equal, and some may be fraud schemes in disguise. It is important to understand the project, the team behind it, and the potential value of the token. Read the project white paper, research the team, and make sure they have a strong and transparent online presence. 2. Setting up a cryptocurrency wallet. To participate in an ICO, you will need a cryptocurrency wallet. This wallet must be compatible with the tokens that the ICO is offering. Most ICOs use Ethereum-based tokens, so an Ethereum wallet would be required. There are several wallets available online, both desktop and mobile app versions. 3. Buying cryptocurrencies. Once you have a wallet set up, you will need to buy cryptocurrencies. Most ICOs accept Bitcoin or Ethereum in exchange for their tokens, so you'll need to buy one of those coins. There are several exchanges where you can buy cryptocurrencies, including Coinbase, Binance, and Bitfinex. 4. Participating in ICO. Once you have your cryptocurrencies, you can participate in the ICO. This usually involves sending your cryptocurrencies to an address provided by the company performing the ICO. In return, you will receive tokens from the company. 5. Storing your tokens. After the completion of the ICO, you will receive your tokens. It is important to store these tokens securely. Many cryptocurrency wallets allow you to store tokens, but make sure the wallet you choose is compatible with the tokens you receive. 6. Selling your tokens. If you have decided to sell your tokens, you can do so on a cryptocurrency exchange. However, not all exchanges list all tokens, so you'll need to find an exchange that lists yours. Once you've found one, you can sell your tokens there. Final considerations. Participating in an ICO can be an exciting way to get involved in cryptocurrency and blockchain technology. However, it is important to do your due diligence and understand the associated risks. Keep in mind that the value of tokens can fluctuate and that there is no guarantee that an ICO project will be successful. Disclaimer: this article should not be considered investment advice. Investing in cryptocurrencies and ICOs is highly speculative and comes with many risks. Always do your own research and consult a financial advisor before making any investments. Thanks for watching today's lesson. Crypto is transforming our lives, and we're here to help you understand why it matters. At Crypto Edge Learning, you get top-tier education for free content that's paid elsewhere, right at your fingertips. If you love this, hit that like button, subscribe, and tap the bell icon so you don't miss out. Stay excited, the next lesson's coming soon with even more insights. See you there.